What's going on, everybody? It is January 26, 2025. Weekly forecast for the week ahead. So I took Friday off, and the reason being is, despite what some people say, it's just been a very difficult market environment, at least for myself. So the best possible option that you can do in these type of environments are things when you're struggling or doing something maybe in your own performance incorrectly, is to take a step back. And I think that was the correct decision. And even looking at what the market conditions are doing from this open, you can clearly tell that a lot of indecisive trading is going on. The lower time frames have been extremely difficult to deal with over the last probably month. And that is typical. That's not untypical for January. It's the reason why ICT says not to trade until probably February. So overall, I would be very suspecting of this week to be hard. I don't know when things will be easier, quote unquote, for myself, or when things will be easier, but that's just something where either going back to just reading the market, tape reading it, or even demo trading, if you're having a very difficult time, that is a very good, disciplined thing to do. It's probably what I'm going to do this week, to be honest with you, unless I see things that are really coming into fruition, just to get a feel for the market, to see if things are going to start moving back to my favorable condition, because otherwise you're just throwing money into a fire and you're trying to chase back losses and you're trying to chase back drawdown. I know in terms of seasonality and tendency wise, February starts to get better, and same with March. So it's just me pushing inside of a time that isn't good. And that goes for all of you. If you're having a difficult time, I wouldn't stress about it, but also make note of it and try to reel back on it. And don't try to push too hard in January. It's not a good idea to do so. So I just want to make note of that. If you look at the weekly forecast here, we have Monday, no news event drivers. Tuesday, we have one red folder. Wednesday, we have FOMC, which is to be very high alert of, with Fed rates in there as well. So anytime FOMC or CPI, something ahead of you that is that major, you want to be aware of the days before where things could be very difficult. So be aware of Monday, be aware of Tuesday. Even though there's a red folder on Tuesday, Tuesday can still be difficult. Thursday, we have 2 red folders, and then Friday, 2 as well. So a lot on the agenda. I wouldn't be focusing on price action really heavily until probably after FOMC. And I'll be live streaming the afternoon of it, and we'll just kind of have to see how that all plays out. So we'll go over that tomorrow in the protocol for FOMC. Looking at Nasdaq, we'll start with that. Looks like we gapped open, and you can see there's a massive liquidity void. So from really this low to where we open, there's no trading that's done, and that's from the open of last week, or the close of last week, to this week's open. You can see the new week opening gap there. And we're also within this volume imbalance of last week that was printed. So it's very indecisive. If you're just looking at order flow and reading it, we created relative equal highs. We failed to run above those, and then we've gapped open lower, creating a massive liquidity void, basically within a volume imbalance. So to me, on the terms of technical side, this is very indecisive. There's a lot of things going on in here that would make me very weary of price, and what I've seen over the last month, it just is not what I'm used to or preferred. Is it something I haven't seen before? No, but I know I'm trying to push in it. I know that's slightly because of me live streaming. And that's just a dumb idea. Again, if you're seeing these type of conditions, you should know that, well, January is going to be typically a lot more indecisive, harder to trade. And that's what we've been seeing. The lower time frames have been very choppy ranged. Even if I find the directional bias right, which has been a lot of the times, the lower time frames usually end up shaking me out anyways. So those are just conditions in months and seasonal tendencies that have different characteristics in terms of profiles and the things that are going to deliver. You're going to see that around December, January. You might see it in August. You might see it in summer months. But typically, spring and fall are the best times to be trading. So as we move into February and March, you'll start to see a little bit better price action. But this is what I would call really indecisive price action because of where we've opened. On the weekly chart, we did close higher. We closed back above this buy side imbalance, which we can treat it as a reclaimed buy side imbalance. And really what we did is we dropped down into this bullish reclaimed order block, and that's where we see this expansion away from it. This down close candle would also be a bullish order block. We closed here last week, open, dropped down into it, we expanded higher. The daily chart, like I said, it's just really, really indecisive. This is really more or less sideways. I mean, only thing that I can see dropping down into would be this bullish breaker. So this up close candle here, if you extend it to your right, I'll have to take away the new week opening gaps. This up close candle, you have a low, a high, a lower low, then you have a higher high. So we're right about the mean threshold of it, but with this volume imbalance and with the liquidity void that we've just printed, it's interesting. It's a very interesting open. I don't really love it. I actually don't love it at all, especially after creating relative equal highs. What I'm doing in here, if you look at this side, is I'm always looking at the different side or a different approach of what you could be looking at. Well, on the different perspective, price could have ran up inside of a premium from this dealing range high all the way to this low. Price could have dug up inside of this premium, and eventually you could see a potential sell-off because of it. It's a little indecisive. We're a little indecisive in my eyes. So I wouldn't classify this as very high probability trading. It's very, to me, sketchy, what I would just kind of print it as. If you look at where price is at currently, the daily chart, you can see the bullish breaker very clearly. You can't see it on the 4 hour as well. But if you look at this inversion fair value gap, which is right here, and the reason I'm picking that is because of the bullish breaker on the daily chart. I'm trying to look for an area as far as where price could potentially reverse away from or where it's trying to retrace into. So it looks like the daily time frame bullish breaker and even this 4 hour inversion fair value gap there we're dropping into. So anytime you have a liquidity void, especially like this, it's probably pretty certain, if I had to be honest with you, of being traded back into. It will not, the market will not leave large gaps in the market for a long period of time, especially like a liquidity void where there's no trading done, no delivery of any price action. Then price will more than likely be willing to deliver into that. How it gets there is the issue I've been having with price. It's not the directional bias, and that's what I've been journaling and seeing as well. If I'm having an issue with the directional bias, that's something really on me. But if I can find the directional bias correct, and I end up getting it right more times than not on my trades, but yet I'm still being stopped, well, I know the delivery, I know the transportation to get there is not clean just yet. It's not what I'm looking for. And I'm having a difficult time this month trying to find that. And I'm not beating myself up over it. Is it, unfair, you could say, or just inconvenience? Sure. But, if you get a flat tire on the road, you don't just end up slashing all your other tires just because one tire got flat. You deal with it, it's inconvenience, and you move on with it. We just have to deal with it. It is what it is for now. It's expected, anticipated, so we'll just have to see how February ends up rolling out in this week. So if we end up going back higher, rolling back above this liquidity void, and we make our way higher, then I would be looking potentially, it would have to show me the evidence towards this clean relative equal highs, not just these, this high over here that are relatively equal at 22,111. That would be ultimately what I'd be looking at overall if we get into that liquidity void, fill it, and we see willingness to trade higher again. If we end up filling this and we collapse lower again, things could go really, really sideways and start seeing some weird price action. So you saw Friday where we failed to run higher, and then we dropped off lower, and you can see this gap open lower today. So very interesting price action overall. If you look at the hourly, not a whole lot within it. You can't really find a whole lot within the hourly chart that we're really dropping into. Maybe this inversion that you could extend to your right that we're within. But really just paying attention to the liquidity void that is there and how there's no trading that's done basically within it. So I would just tape read it tomorrow during the live stream, and I'd see if we're willing to fill that in. Anytime there's a liquidity void within the market, I usually don't even need a bias. Even on the higher time frames, I just pay attention to the liquidity void because 9 times out of 10, it's willing to fill it in the next day or the day after. It usually never leaves us open more than 24 hours, and we'll see how that works out this week. It's not 100% guarantee, but from what I've seen, it usually never leaves that open. But again, even if I have that correct, it's also the directional bias or the lower time frame delivery. What I'm overall concerned with so far this month is, am I able to trust to get into these lower time frames and have the delivery get me there without really shaking me out of the market? So that's it for Nasdaq. I mean, we'll go over a couple other things as usual for the weekly forecast and kind of prep for the rest of the week. And these are things you'll have to pay attention to for FOMC and Fed rates, as dollar index, bonds, yields, foreign exchange. Definitely pay attention to these this week and see how these are trading with that news release. So if you look at dollar index on the weekly chart, we closed off lower. Looks like we dropped away from this weekly time frame sell side imbalance, and we're dropping into, if you look at this candle here, this is a mitigation block. So this is the difference between a mitigation block and a breaker. Is a mitigation block is just a continuation. It's almost like a classic retail support and resistance. It doesn't make that lower low or that higher high, pattern like a breaker, right? It just has a higher high, higher low, higher high. So within that mitigation block, you also have a fair value gap or buy side imbalance, which is here. So this buy side imbalance, which is right there, we're dropping into. We'll see if that gives support for potential prices higher, or whether or not we're going to see a full collapse on dollar index really over the next several weeks and months here. That would give some support to potential higher prices in Nasdaq. If this thing really starts to fade off lower, then we have to start really looking at the idea of higher prices in Nasdaq. So that's the reason why we're seeing higher prices so far in Nasdaq, and we'll just have to see. I mean, the reason I'm kind of a little still unbiased as far as the long-term vision is we're basically at a breaking point to me. Is since we've moved away from, on the weekly chart, we moved away from the sell side imbalance that's inside of a premium. If we start breaking through this weekly chart, this mitigation and this buy side imbalance, we start closing beneath it, then to me that would really show the idea that we're going to run maybe to potentially these relative equal lows, because that's the last line of defense as far as if it's going to give way to higher prices, it would have to do it inside of this. So the daily chart, you have this buy side imbalance that we dropped inside of. We could potentially see higher prices out of it, just like the weekly chart. Going over to bonds and yields, bonds are still relatively lower. They haven't done a whole lot. Sometimes with bonds and yields, if they're not giving me a whole lot of information, I'm not going to really utilize it. Yields are still relatively higher. They've had a little bit of a retracement in here, just like dollar index. But everything is still majority the same with those. Foreign exchange, you see this reaction out of EU, which is inverse to dollar index, basically 100% almost. You see that reaction there. Same with GU. AU still lower. All of them are still relatively lower. This could just only be a retracement. That's what I'm suspecting on dollar indexes. All that really is just a retracement, and you see higher prices out of it. And we could potentially see lower prices on Nasdaq overall. We'll just have to see. I mean, if everything goes higher, then we just go with it. I'm not really one-sided overall just yet. If you look at ES has made a higher high. If you look at SMT between the two, ES has made a higher high above Thursday, December 26 high. So if you go over to Nasdaq and you go to the daily chart, not the weekly, the daily chart, this here, Thursday, ES has made that higher high while NQ has failed to make that, right? So there is an SMT between the two, which is bearish. ES is relatively a lot higher, and what I'm stating is if you look at the liquidity pools on ES and NQ beneath us, they're very, very strong in terms of what I could be seeing. I mean, if this thing fails to go higher and we see some type of SMT or some type of top in this market, then we're going to be looking at ES running back down into these relative equal lows. You're going to see Nasdaq run back down to its relative lows as well. So these relative equal lows on Nasdaq are very, very clean. We could potentially see that. Everybody was chasing this higher. This gap opening is very interesting. It's very strange to me, to be honest with you. We're kind of aimlessly, not aimless, but we're very sideways in a sense. I mean, we're just sitting inside of this sell side imbalance. Once we start seeing some real legs moves lower where we're really trending, this is what I mean is even being in drawdown and taking losses multiple times in a row, you have to look at the technical side and say, look, is it technical or is it me? Am I at least doing my job as far as protecting my capital and doing the right thing, which I have been? Is it inconvenience and does it suck at times to take a lot of losses in a row and kind of have to choke on that? Yes, but if you just look at the technical side and be like, look, Technicals just haven't been that great. I mean, as many people want to sit here and say, well, you should know how to trade in any condition. Well, I just don't think that's true. I think there's times where the environment is not right and you're not going to find your footing. And the best, decision is to either step away or to observe it until you can start seeing some real movements. If we really start seeing that going into February, going into March, where we're seeing a very trending Nasdaq into these lows, I mean, all that drawdown and the losses will be made back before you even know it, and you're not even have to think about it. But if you blow all your capital now, you're not going to be able to use it. So you have to think a long-term vision. As many feel those emotions of wanting things back, it's better just to wait. So we'll go step by step in here and see. Nothing's for certain. We could definitely see higher prices out of it. So we'll just have to roll with whatever price is giving. So that's going to be it for tonight's weekly forecast. And until tomorrow, good luck and good trading, everybody. Be safe.